I got no booze in me, no sugar since I got back.
That is pretty good. No sugar too?
Zero, nothing. Hold on. What did I have?
Zero, nothing.
I feel like I had a donut, like a munchkin one night. That's it. That's not bad.
A munchkin or a donut? Big difference.
A munchkin. There's always munchkins in this house, as you can imagine. Hey everybody, JC Peretz here, founder of AllStarCharts.com, and we are back with Pardon the Price action. I am joined as always with Steve Strazza. We just got back from a nice week in California. Did you enjoy yourself?
I always have such a great time out there, of course.
Beautiful place. I lived there for 5 years, so when I'm there, I'm like, all is right in the world. Watching sunsets, good eats, it's fantastic. But we got money to make, and after a year of corrective action in commodities, Mr. Strazza, they look ready for another leg higher. Is the commodities supercycle thesis still intact?
If you just go to these crude oil charts at the end here, I think they tell the best story, right? And crude is the largest weighting in a lot of these indexes. If you're looking at like the CRB index, it's mostly crude, it's mostly energy, right? On a tactical basis, we have this beautiful reversal pattern forming right at the prior cycle highs, right? But if you zoom out, to me, I'm more excited about the zoomed out, ultra long-term view charts. Like structurally, these are some massive bases. And it's not just in energy, we're seeing them all over. So I think as one starts to go, another starts to go, we get a growing list of, these massive base resolutions. I think, I think this goes on for another several years if these patterns start completing higher.
No question. As you're saying that, I'm like going through these charts, orange juice futures, live cattle, feeder cattle, sugar making new highs. It just seems inevitable. Maybe perhaps something like a gold breaks out to new all-time highs, right? I think those are some serious implications. And, for a lot of equities investors in stocks, and, we focus a lot of our attention in the stock market, of course. Well, since 2020, the stock market has been in a relative downtrend compared to commodities. You can argue that we are in year 4 now of a commodity super cycle that began when crude oil traded below zero in 2020. And I think that, you're going to have a hard time convincing me otherwise. There's very little evidence to suggest that is not what it is. To me, historically, commodity cycles last over a decade. We're 3 years in. I think this could just be the beginning.
I'm with you. All right. The puzzle pieces really seem to be coming together for energy stocks. Are you bullish?
I mean, listen, it's hard. It's hard to be bearish of energy, right? Am I wrong? I mean, when you think structurally and you think about, take a step back, be like, is it possible to have this long, secular trend in energy? Is that possible? Well, not only is it possible, it's what usually happens. So when you answer this question, or when you look at the market in general, I think that it has to come within the context of that. Like, not only is it possible, it would actually be perfectly normal. If that's not what happens, that would be unusual. So yeah, you look at higher oil prices. Clearly here, you're looking at an outperformance of energy when oil is doing well. Just look at these returns over the last several months. And a lot of stocks have been struggling in this environment. And it's not just oil specifically. You're the one who's always talking about it yourself when it comes to coal or uranium stocks. Like, there's a lot of other areas, not like the alternatives like a solar or wind, none of those, not the green ones, just other dirty ones. Although you can argue uranium's not dirty. I don't really know how it works.
I've been calling them traditional alternatives, right?
Traditional.
And I don't know how traditional nuclear is, but coal certainly is. But yeah, you're right. It's not tan. It's not solar energy. It's uranium, coal. We'll talk about that for the next topic. I think it's simple, right? If you look at chart 16 here, energy was the place to be off the COVID lows, right? During that bull market, performing group. And now this is just really constructive sideways consolidation type of behavior. Why wouldn't this trend resume in the direction of the underlying trend, which is higher if and when, this consolidation comes to an end? And it looks like, we're knocking on the door again here at these pivot highs for something like XLE. I think this could start any day now. So.
All right. Well, when it comes to commodity stocks, few groups look better than coal. What are your favorite charts right now? So much commodities today in Pardon the Price action. I like it.
Yeah, just look at this coal index, right? There might
Explain what it is to the folks who don't know.
Yeah, so there might only be 8 stocks or something in here, but that's really all there is, right? These are these are outside of like a couple $100 million names, right?
Slim pickings in the coal space.
It's true. And there's a lot of energy stocks, right? So that's not true for the entire energy trade, but for the coal subgroup, we don't have much to work with. They delisted our KOL ETF, which we love, in the winter of 2020. And again, just like the Arch Coal name change, this is the kind of sentiment stuff that bottoms are made of. Right? I thought this was funny. You mentioned on the conference call last night, Arch Coal changed its name to Arch Resources like 3 weeks after the stock bottoms. So coal looks really good. CEIX and AMR already left the station. I think Arch is the one that's really set up and actionable right now. Yeah, I like this. I like the setup.
How hilarious is that literally coal was so out of favor. When you talk about sentiment, guys, coal was so out of favor. The Arch Coal literally changed the name and took coal out of the name. Like, come on, man.
Yeah. Like Riot Blockchain, right?
Like Riot Blockchain. Yep, that's exactly right. Oh, I love it. You can't make this stuff up. And yeah, 100%. You see that, you saw, they're changing the name. They're delisting because you say we loved the coal ETF. We were the only ones, apparently, right? We were the only ones, but these names have been working. AMR, Warrior Met, if you guys are familiar with Walter Industries from back in the day, from prior cycles. So a lot of opportunity there, Straza. Measuring risk appetite. Let's do it.
When do you think they'll give us a new coal ETF, and what will that mean?
It might already exist. I don't know.
All right. We're getting mixed signals, at least in my opinion, from risk appetite. What's your takeaway from all these charts?
Well, home construction tends to move with the S&P 500, and when they diverge, that's a heads up. We're not really seeing any divergence, really. They're moving together. Yeah. They're correcting together. So no real divergence there. I would say that the strength in semiconductors, the fact that they're already flirting with those highs, struggling, but yet alone flirting with those highs before the S&P is probably not a bad thing. How good is it? I don't know. As far as risk on, risk off with respects to small caps and ARK, I don't necessarily think that, again, none of these have zero weighting in the S&P 500 and Dow Jones Industrial Average, for example. So, the indexes can go up without these. We've seen it, right? So it wouldn't be anything new. So I don't think that's necessary risk off. I think it's really this one. You start to see rotation into some of these low volatility consumer staples. Now we're talking, right? Now I can see that because you're seeing that strength in the United States dollar, right? That you haven't seen go into staples on a relative basis yet. It's really just been the dollar. So to me, that's the big one.
Yeah. Go back to this low volatility. I think you're right. This is the one that really stands out to me most. XLU SPY looks almost identical, right? So same thing for utilities. If you're a bull, you better hope that's not a breakdown, right? Because the market's been under pressure for 2 months now. But utilities, low volatility, they were underperforming. If these stocks start outperforming the defensive groups, I find it hard to believe that the market's finding some sort of short-term tradable bottom, right?
Yeah, right. If you start to actually see rotation into those defensives, yeah, that's probably not a good thing. But we've barely seen it. They haven't really gotten going yet. So that's really next, in my opinion.
You ready to talk about bonds?
You know it. The September Fed meeting is underway with the market expecting a pause into next year, apparently. A lot can change by then. What do you think their next move will be? Because I know you're so interested in this.
And I know you're so not. So I'll set it up. I'll give a little background, and then you could do the charts.
What is it? IDGAF?
Yeah, you don't give up. Yeah. Got it. Hear you loud and clear.
I'm not a bank. I'm not a bank. I'm interested in the 10s, 30s, mortgages and whatnot. Dad things.
I explained it to you this morning. The reason why this situation appeals to me right now is because I think the market is very much offsides. Right. If we look at our target rate probabilities table, what this is ultimately showing you, if you know how to read this kind of a matrix, right, is the Fed is going to do nothing. The market expects that the Fed will do nothing until June of next year. That will be their next move. And that will be a cut. And then we'll cut 3 times by December. Right. So we'll be looking at Fed funds rate of 4.5, 7.5. Right. When we polled Twitter, and I'm totally with Twitter, 2/3 of the audience thinks the next move is going to be a hike. And I think it has to be a hike if these reversal patterns in these commodity contracts are real. Commodity prices are going to start ticking higher. It's really this chart 45 that shows what I'm talking about. If crude's going higher, CPI is going higher, Fed is not done. I think there's a trade there.
What's the trade?
Short bonds.
Yeah. Maybe. Listen, I think look at the IEF. I didn't drop it in here, but if you look at the IEF, if you below 100, there's nothing to do there. You could be short, you could not be in bonds, but I think if you're looking to buy bonds, I think staying out of that, if we're below 100 in IEF, I think it'll keep you out of trouble. That's how I see it. All right, word association. What do we got?
This is the little game that we like to play. I'm going to toss out a word or a phrase. You're going to tell me the first thing that comes to mind. Today's phrase, government shutdown.
I don't care.
The hardest part about this game is finding a word JC cares about.
Government shutdown. I don't know. Like, what do you want me to tell you? It doesn't mean anything to me. I don't work for the government. I don't know. I don't care.
I know you don't. No, listen, I don't care either. The thing is, you're going to hear about it. It's going to be in the news more and more because that's how these things work. But this isn't the first time and it won't be the last, right? It's happened in the past, not too long ago. I think about 10 years, right? Less than 10 years, maybe, was the last one. The market gets over it. Don't overthink U.S. politics. They seem to make all the worst decisions until it matters, and then they figure it out and they do the right thing. And that's what I think will happen again.
All right. Well, at least somebody's thinking about it.
Well,
you know what I'm saying?
All right. 2 minutes, Joe. Give it to me.
Some of our favorite patterns around here are when tops turn out to not be tops at all. Talk to me about how to trade these formations.
I know these are some of your favorites also. We've seen a lot of them this year. I think before we even get into the charts, let's just talk about the essence of a top, right? A top is a reversal pattern. When a top doesn't work out and turns into a failed top, it becomes a continuation pattern. Continuation patterns are far more likely and more common than reversal patterns simply because of what Charlie Dow taught us, a century ago, which is that markets trend and trends persist, right? So continuation patterns is just a continuation of the underlying trend, while a reversal, you're betting on a trend change. Life is harder when you're betting on trend changes. So when we look at these potential topping patterns, we should always be thinking in a way where we're saying, what if it's not a top, right? So that's what I would encourage everybody to take away from this conversation. What if it's not a top when you look at these things? If you thought something like that in NXE, Next Gen Energy, ways to trade these patterns when they fail, you would simply draw a horizontal support line. If you put up chart 50 at the right shoulder, you could use that as an entry, play it back to the head. That trade's been working really well. And there's other examples too.
And by the way, the best part about when a top doesn't turn out to be a top, it's actually just a continuation pattern. Few things are that bullish, first of all. The upside implications are tremendous. Yep. And when Strauss is talking about the trade from the right side of the shoulder to the head, well, that's a nice trade. What this also develops is a huge base. So the resolution out of this through the head takes it far past those levels for a monster trade. And the best thing about all of it, in my opinion, is that the risk is very well defined at what they refer to as the neckline of that topping pattern, whether it be something like this or something like this, right? If it does break that neckline and it does confirm that it's a top, not only do we not want to buy it, but maybe it is actually a top. I also like it when it breaks and then quickly reverses. I also like that a lot too.
When these patterns start with a nice shakeout,
those are the best ones.
That's when they're the best.
That's true.
You're right about NXE chart. We would typically draw that very differently, JC, right? We would draw it with the base coming off the uptrend. But a lot of times they're failed tops.
All right, Straza, hot takes. What do you got?
Listen, we've had some nice, sizable IPOs last week or so. The IPO market is not back. It's not back, and it won't be for a while. These are companies that could have and would have gone public in any environment, right? ARM is a very mature semiconductor company. It's actually like a $50 billion company, been around forever, profitable. This is not like a startup tech company. And Instacart, while it might be a bit of a startup still, It's a profitable company, right? So these are not the kinds of companies that were coming public in 2021. If you look at this chart here from Deal Logic, shows you just what a cliff the IPO market has fallen off of. And I think as long as interest rates are where they are, and we're talking about them potentially going higher, that's just going to continue to put pressure on the IPO market.
Does it look like a chart of Bitcoin?
Yeah, it does.
Listen, both of these things are evidence of risk appetite in the market, right? IPO markets, crypto assets, and other risk assets doing well. That makes sense. And we certainly haven't seen that, right? So to the point. All right. So my hot take, what do you think my hot take is?
Something about football or the ribs you made this weekend. I got it, didn't I?
No.
What is it?
Listen, my hot take is that there's not enough ideas being floated around amongst smart traders and investors like there was earlier in my career. I would spend a lot of time at happy hours and dinners talking with traders, talking to investors on a regular basis, and maybe that's happening. I don't see it as much as I did before. So we're going to change that and maybe start to organize some things. But that's my hot take. Not enough communications amongst professionals behind the scenes like there once was.
All right. I like that. I think even publicly, there's not enough good ideas or original thought being shared, or even as much as there used to be.
Well, we're going to change that. I'm on to something. Don't worry about it. I'm coming at you.
All right. I'll get involved. Get involved in that.
All right. Sounds good. All right, guys. Listen, thank you for watching. Make sure to give us a like and hit the subscribe button so you never miss an update. And follow me at All Star Charts on Twitter. And be sure to follow Steve at Straza. Leave a comment below. Let us know what you think. And we'll see you next week.
Thanks for watching.
Adios.